Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Robin Frankel, senior credit cards analyst at Forbes Advisor, a trusted destination for unbiased personal finance advice, news, and reviews to discuss how COVID has changed Americans' credit behavior, as well as what to do with all of those credit card points accrued during the pandemic. Robin, it's great to see you as always. Welcome back to Trade Talks.
Thanks for having me back.
Robin, how were incomes impacted by the pandemic?
Sure. In general, you may have heard a lot of people talking about this K-shaped recovery, and that has proven to still be the case. Those who were on fairly solid financial footing before the pandemic, for the most part, have remained so, where those who maybe had a little bit less stable incomes, or particularly those who worked in the service sectors and whose jobs were impacted by the COVID crisis, they haven't been faring as well. Their savings, they've had to dip into savings, even in spite of some of the unemployment benefits. We've seen in general, folks with lower incomes struggling a bit more.
Were consumers more conservative with their credit cards during the pandemic?
Surprisingly, across almost all income brackets and circumstances, folks were in general more conservative with their credit card spending. We did see that debt did decrease when it came to credit cards, which is counterintuitive. You would think maybe folks who have trouble making ends meet would be charging things to their cards, but we actually saw people paying down debt at levels we hadn't seen in years.
How have credit card and credit card concerns evolved?
Sure. I think that, a lot of credit card issuers in particular have been very sensitive to the changes in the economy, and they're offering certain incentives to credit card users that they may not have had in the past. For example, some credit cards like Chase, certain credit cards, you're allowed to use your rewards. It's called pay yourself back. And instead of using your rewards for travel, you're able to use them to pay yourself back for things like restaurants and grocery spending. As far as from the consumer side, credit card spending was down and people were being much more conservative in ways that we hadn't seen in the past.
And Robin, what's the best way to prioritize debt?
Sure. You should always focus on paying off your highest interest debt first. For most people, that tends to be credit cards. For example, something like a mortgage tends to be in the single digits, whereas credit card debt tends to be in the double digits. And what that means is it's simply more expensive to hold on to that debt. The longer you hold on to it, the more you're paying in charges and interest. So definitely aim to knock out the high interest debts first.
And finally, what's going to happen with all those points and miles accrued that we were not able to use over the past 15 months?
Sure. There's been obviously a lot of pent up demand if folks have had to remain in place around the world. We're seeing a tremendous uptick in interest when it comes to taking trips. A lot of rental cars are very hard to come by this summer, showing that the interest in domestic travel has greatly increased. And as international borders begin to open up, we've seen a lot of interest in search terms for people booking flights, booking hotels, and just international travel in general.
All right, Robin, appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.
Thank you.